Okay, hello everybody. Welcome to this very special webinar. I'm delighted to be here on a Thursday evening. It's the 29th of March 2012. It's 6:07 p.m. and I'm delighted to be joined by Josh Davidson from FX Internals. We'll explain the connection in a minute. Just so you know, a lot of you have heard many of the seminars that I've done. Josh is a bit elusive, but every 6 months we drag him into a webinar. And I've managed to, drag him into this one tonight. Josh is part of a team of programmers that we have in Beverly Hills, California, that are now part of the Trade Guider team. We're delighted that they are, and they've been working on a number of projects for us. We're not going to discuss all of those tonight, but we are going to show you one of the most important ones, which has been our best-selling plugin, which is a VSA plugin for MT4. Now, just as we get going here, can I just ask everybody, can you all see a screen of Trade Guider Real-Time V4, and this is the 6A contract of the Aussie dollar that I was talking about yesterday. I was expecting it to go up because of this signal here, okay, and this signal here. Can everyone see that? Okay, good. All right, so everyone's now seeing the charts. Excellent. Okay, good. We're going to talk tonight about Forex. We're going to talk about currency futures. We're going to talk about MT4, which is a platform that many Forex traders use. This is it here. You can see this. Mine is coming directly from Josh and Mike. These are the guys down in Beverly Hills. FXCM is the platform I'm using here. Powered by BT. This is a demo account. This is not a live account that I've got here. But for the purposes of tonight, we're going to explain to you what all of this means. It all means something. Everything on this chart means something. And how did I come across Josh and Mike and the team down in Beverly Hills? Well, that's a story in its own right, and we'll come back to that in a second. But what I can tell you is the development of the Trade Guider platforms and certainly the plugins would never have got to the level they've got to without the team down there. And I want to make this public right now and say thank you to the team, to Josh and all the guys down there in Beverly Hills and FX Internals, for bringing to life what really Tom Williams wanted. Tom Williams was the man that taught me to trade. He's a former syndicate trader, and he invented volume spread analysis, which is what all of this is about. Now, you're going to see a lot of things on this chart here, and some of them you're going to recognize if you're a regular, and some of them you're not going to recognize because you're new. So let me ask the next question. If you've never seen a Trade Guider presentation before, can you type in N for new? Just N for new if this is your first Trade Guider presentation. So I know to obviously cover some of the basics with you. Okay, Mark, Marcel, welcome. David, Brent, Neil, Raj, Texeng, Weijin, okay. Linda, welcome to you. I know Eileen, you're new for a week, but you feel like part of the family, Eileen, so I know you've been speaking with Lauren, which is great. Humberto, welcome to you. Okay, I'm seeing a lot of other people typing in now, so there's too many people to list all of a sudden. But just to say welcome to all of you if you're new, we're going to talk about something called volume today, and volume is important, and yet most traders in Forex do not understand the significance and the importance of volume when trading the Forex markets. And it's with this I want to introduce you to Josh Davidson. Now, Josh is based out of Beverly Hills, California. He has much better weather than I have, although I must admit we're competing pretty well here in Chicago the last 4 weeks. We've had 80-degree temperatures. But I was very, very blessed and lucky to meet Josh and his partner, business partner Mike, down in Las Vegas at the Traders Expo. Yeah. But rather than me tell the whole story about why they approached us on our exhibition stand and why they are now connected with us, probably the best idea, because Josh and Mike are Forex experts, is to hand over to Josh just to set the scene for tonight's presentation. And perhaps, Josh, you could just give us a brief overview about your background and the team's background down there. And why did you find me and Richard, my business partner, and what made you choose VSA as a chosen path? Over to you, Josh.
Sure. Thank you so much. I have to echo that we are very, very happy to be working with you for these last, say, I think it's 16 or 17 months now. It's been great, and I think we've got a lot of really good products out the door and some that are upcoming. So my business partner and mine's background are in software engineering. I made video games and entertainment software for 13 years, and my business partner makes hardware and software for the Defense Department. So we come at trading from a very, very mathematical and technical approach, especially for technical traders as opposed to fundamental traders who trade sort of longer-term news and trends and earnings and things like that. And as we got more and more into writing our own software for technical analysis, a thing sort of appears in front of you, which is that most indicators, like a moving average or a Bollinger Band or a commodity channel index or an RSI, which traders use, are all based on the existing price of the instrument. They're in a technical term, they're called a derivative value. So as price moves up, the moving average moves up, the stochastic moves up, the Bollinger Band moves up. They all sort of do it at slightly different rates, but they're all related to each other. So having a moving average and a Bollinger Band and a CCI, commodity channel index, and an RSA, having all of these technical things sort of step on each other. They overlap because they're giving you pretty much the same information over and over again. So we sat down and started thinking about, well, what kinds of information could we get and find that would be useful in terms of understanding how and why prices move that is not related to price. And volume is one of the clearest ones that's just sort of obvious. You know, volume has nothing to do with price directly. You can have prices move up with high volume or prices move up with low volume. You can have prices move down with high volume and low volume. You can have prices move sideways with high. It's just unrelated. So therefore, patterns in the volume and price seem to be interesting to us. And when we started looking at this, Gavin's right. Nobody looks at volume on Forex. And mainly because volume on Forex is measured in a slightly different way than volume on an exchange-traded thing like a stock or a future. When you look at the volume on a stock or a future, it's the actual number of shares or number of contracts sold. So if you have 50 and 50 and 50, you know, the count is 150 shares or contracts. In Forex, it's just sort of the overall activity. It's the number of ticks, and ticks being, in this case, the number of times the prices change. So it's sort of how many trades occur that move the price around. So it's not trade volume, it's tick volume. And it was with that in mind, sort of, that those two things were different, that we were at the trade show and we had seen the VSA stuff, and we had looked at the videos, and we had read a few blurbs and books, and the reviews were pretty good, but we didn't know a lot about it. So we walked up to Gavin and the gang at their booth, and we were like, oh, VSA, we want to know more about this. We have some questions about it. And we just sort of watched the demo for about 10 minutes, and then when he was done, stepped on up and said, hey, let's talk about volume and Forex and how that works and why it doesn't. And it just seemed to be a good match between what we are interested in doing and are able to do and what the TradeGuider guys have, which is what we think is an incredibly powerful system for analyzing price movements and being ahead of the curve in terms of understanding where they may or may not go. So is that a good summary there, Gavin?
You nailed it, and I couldn't add anything more other than to say that I must admit the show that we were at was the Las Vegas Traders Expo a couple of years ago. I was extremely busy. I get a lot of people coming up to the booth, and you can imagine, you know, you can't spend more than 5 minutes with someone because you're just running around. But when Josh and Mike came up and made some observations on the chart, I knew these guys knew what they were talking about. That was the first thing. The second thing I observed was the fact that they were very clever, and they knew something that a lot of people at that show didn't know. And the third thing, which you know, Josh was a little bit shy of telling you, but he used to work with Microsoft, and you know, that's a pretty big company, and I know I'm not going to tell you too much, but he's worked on some pretty serious projects. So I knew that we had the right team in place to take this forward. But to go forward, Jerry makes a comment here in the chat window here. It says, I've always thought that floor traders don't use indicators, but rather volume. Floor trades have been around a long time, or floor traders. Jerry, my brother-in-law, it's his birthday tonight, is a floor trader at the CME. I can tell you that when I first met him 8 years ago and we talked about Trade Guider, he immediately observed that we were using something that he used, which is volume. But he used a different term for it. He called it the institutional money. Right. I call it the smart money. Okay, my book is called Trading in the Shadow of the Smart Money. It's the big institutional players that move all markets. And whether you say it's in the Forex market, the futures market, the stock market, there's enough money in these markets that big players exist, and they do exist. And the smart money absolutely exists. Now, you're looking at a chart at the moment. I mean, we could put up any of these charts. This is the euro. You can see this is in the MT4 platform, and it's got a series of things in here that we're going to explain to you. Josh and I will explain to you tonight. But Josh, I want to ask you a question. Why do you think there is a complete misconception that volume is irrelevant in spot Forex? And I don't know if you can answer that. I've got my view of it. But why is it that traders seem not to pay any attention to the volume in the Forex market? What do you think that can be?
I think there are a couple of factors. The first is if you go back to the real-time, the Trade Guider V4 real-time, and you look at the volume there, all of the volume that shows up on any of those contracts comes from a single exchange. It is from one location. All A6 volume or 6A volume is coming through the CME, and it's reported universally to everybody. That's not the case in Forex. When you look at a Forex chart, you're getting the volume that is going through your broker, essentially. Every broker has their own set of traders and set of customers that they match to each other to trade. Some of them are institutional, some of them are not. And so volume will vary from broker to broker. So that variance causes people to scratch their heads. Also, as I mentioned before, you have trade volume versus tick volume. And people sort of dismiss tick volume because it's not really the volume people are trading. It's just a level of the activity that people are doing. It's a measure of the number of times the price changes, moves up a bit or down a bit. That combined with a general bias against volume because it doesn't initially make sense, right? Like price up, price down, volume down. These relationships are far more complicated, and you have to really understand the relationship in a more detailed way. You combine all three of those factors, and I think most technical traders and most technicians sort of just throw their hands up with respect to Forex volume because it's just complicated to them. Now, if you take a little bit of time and understand that, because this is what we did, we went and matched exchange-traded futures volume to the currency Forex volume, and we looked and saw how correlated they were. And the
Josh, sorry to interrupt you. Can I show that on the euro? Just before we go further, let me what Josh is talking about here. I know some people get very confused about. If we take the euro, okay, this is the now. I know Josh just mentioned we talked about currency futures and spot Forex. But right. Volume, and Josh mentioned it, he said it's the word activity. It's the activity of the institutional money. And these contracts are mainly arbitraged. Sometimes you get a slight crossover during, like we've seen today with a contract rollover, but generally they're arbitraged. Now, I want to just show you the 6E. Now, let me be clear. The 6E pound F contract, this is a 4-hour chart. Every bar is 4 hours in duration, just to be clear. Secondly, it's this contract you see here is coming directly from CME Group, where I live here in Chicago. It's a centralized exchange. This is not tick volume. This is traded volume on an exchange, but it's trading the euro versus the US dollar, okay,
right.
or the US dollar versus the euro. So it's a currency. Now,
it's the euro versus the US dollar.
correct. Now, if I now go EUR A0-FX, and I'm using eSignal for my data, which I prefer, and I type in 240 as the time frame, which is the same one, it matches, I can bring up a chart of exactly the same contract, but now we're in spot Forex. Now, if I put these together, and you can see quite clearly they look very similar, don't they? They look almost identical. This proves, and I'm formerly a police officer, so I'll say beyond reasonable doubt, if we actually look at the volume here, okay, now let me ask all of you, this is at 6 a.m., 6 a.m. on the 26th of March, they both correlate. What do you all notice about the volume on this bar? Just type in what you see. Tech saying, I hope your emergency isn't too bad. Sorry, I don't want to see. What do you notice about that? Okay, and I missed a few questions there, but everyone's typing in, it's ultra high. Ultra high. Okay, now we know this because the Trade Guider program will tell you it, but we notice the market's marked up. Now, watch what happens over here and over here.
You have
now this,
you have exactly the same signals from the software.
Of course you do, because the reason is that this is tick volume, this is exchange traded volume, but remember the number one rule that Tom Williams taught me when I first got into this. He said, Gavin, don't get into the whole thing about volume, just think about it as activity. That's it. Don't even use the word volume, just use the word activity. What is the activity on the bar? If it's very high and spiking up, this could be an opportunity for professionals to sell into an up move, because that's how they do it, wouldn't you? If you bought a motor vehicle or an automobile and you bought it for $1,000, do you want to sell it for $200? You're going to take an $800 loss. That's not going to work. You're going to want to sell it high. That's how the markets work. Most people, unfortunately, chase the price. They don't understand the mechanics of the financial markets. But they're very simple. They work in anything. If you owned a shop or a retail outlet, you couldn't buy an article in for $1 and sell it for 50 cents because you'd go out of business. Exactly the same in the financial markets. You have to sell at the higher price and buy at the lower price. Does that make sense, everyone? Let me ask the question to the audience. Does that comment make sense? You have to sell it higher and buy it lower to make a profit. Yes or no? Tell me if that makes sense. Josh, does that make sense to you?
Absolutely.
Okay, so if that makes sense, why is it people chase the rising price in a market? They get excited. They see a sudden surge in volume, and they believe, because their charts are telling them the price is going up, they should go long. But actually, when you understand VSA, your best trades come when the market goes up in a downtrend. Because if the market's in a downtrend and the market tries to go up, especially on low volume, as we saw here and here, then it's very likely to fall. So when we see volume spikes, they are very significant. But let me reiterate and prove beyond reasonable doubt. That is a police term. I shall use it in this seminar. My surname is Holmes, H-O-L-M-E-S. I share it with a famous detective called Sherlock. Now, if Sherlock was presenting evidence about tick volume versus exchange-traded volume, the evidence is right in front of you. It does not lie. The chart cannot lie. And yet, I remember Josh and Mike telling me that they'd been on to, I think it was Forex Factory, wasn't it? You guys were, yeah, Forex Factory. It's a forum. Thousands of people talking about volume in Forex. Now let me show you something before I bring Josh back in. This is important. We had one of our traders, who's one of our customers actually, who had entered a competition and we every year, I don't know if you've heard of it, Josh, they have the World Cup Trading Championship.
Absolutely.
Yeah, they trade real money. They don't trade funny money. They're trading real money. And one of our customers won this competition, not once but twice. His name's Tim Raymond. Now, this is a picture of Tim. I hope you can all see that. He was formerly a journalist with the Sunday Times, which is a major newspaper in England. And they interviewed, you can get a copy of this from our website, but he made a 44% gain when he won in 2009. Unfortunately, I heard he had an injury after that and wasn't able to trade. But I do know this, and I'll read this to you, and I want to thank Tim for saying it in the article. He wrote a few words, and those words are worth $1 million to me, and certainly to, I'm sure, everyone connected with TradeGuider, because it says in 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis, which is what we're going to teach you tonight. I rang him, and he was very reluctant to sell me his software. He said, trading's very difficult, you know. I insisted and agreed that I'd pay £5,000, which he did, in installments, Raymond says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the TradeGuider website, which is our website. For me, it demystified the markets. Now, how do we demystify a market? We tell the truth about the market. The market is all built around principles, and the principles are built around the process of supply and demand, or no supply and no demand. A market will fall when you see no demand. It will, because professional money are withdrawing their interest. This is a spot Forex contract. Here, we have a currency futures contract traded through CME, trading on no demand.
You're doing exactly the same thing.
It's, of course they are, and they always will, Josh, as you and I know. Volume is the key to the truth. And it works in Forex as it does in any market because, and I'll simplify it for you, it is the activity of the institutional money that we're going to follow. Okay, so how do we do that using another platform? I'm now going to hand over to Josh, who can talk to you. Josh and Mike, they developed all of this. I mean, it's the VSA indicators that you see in TradeGuider, but it's built into a platform that has a number of advantages from a cost perspective. Number one, am I right in saying, Josh, you can have the data and the platform for as long as you like, and you don't have to pay for it, excluding the VSA stuff, but you can get MT4 pretty much consistently, and even if you want to practice trade, you don't have to fund an account. Is that correct?
That's absolutely correct. You can open up any number of demo accounts, and you can use the software for free, with the exception of the VSA software, but you can use the trading platform for free. Absolutely.
Okay, so that's important to know. So first of all, if you're wanting to learn this stuff from scratch, this platform is available through Josh and Mike. In fact, you can get it from many places, but you know, I'm using FXCM, which I believe you're a broker for, aren't you, Josh?
Yes.
You're a clearing broker. Okay.
Yeah.
So I use this, and this is where they've got this. Now, you'll see every time I click or highlight an indicator, whatever that indicator may be, I mean, we can go to this one here, and you'll see the shakeout that caused this up move. This is the euro. And we're now dealing with the chart here on the 4-hourly. But what we'll see is the spot Forex volume and the tick volume will very often align. Now let me go to a chart that I've been following, and you and I were talking about earlier, Josh, which was the signal here, which was the stopping volume. I think that's the one you were referring to, wasn't it?
Yeah.
Yeah, it was there for all of us. So perhaps what I'd like you to do, Josh, if you can, with this platform at the moment, can you just explain to us what part of TradeGuider have you guys put in here? What is this? Because this to many will not mean anything. And what does this mean? So shall we start with this screen up the top here? Or where do you want to start?
Yeah, let's start on the top. I mean, some things are going to look very, very TradeGuider-esque, and because it's exactly the same. And some things will be a little different because we had to work with the confines of the MetaTrader 4 platform. So on the top, it looks almost exactly the same. Down arrows are signs of weakness and are red. Up arrows are signs of strength and are green. And I think you pointed that out. And then when you mouse over them, a little pop-up window comes up with the explanations, and that works very similar to the previous software. The purple dots and the blue dots are the volatility stops that you have in the TradeGuider software as well, and they're a very good indication of where you may want to sort of put your protective stops on trades, because it's how we measure, or how TradeGuider measures, volatility. The diamond trending system is very similar again to the diamond trending system in the TradeGuider. It shows you sort of a moving average and a generalized trend. Green means the trend is up, gray means the trend is indeterminate, and red means the trend is down. So, and then again, on a slightly different trend measurement, we paint the bars blue and red. Blue indicating an uptrend on the bar, and red indicating a downtrend on the bar. And that should be very, very similar to the TradeGuider software, both real time and end of day.
Yep.
On the pane below, we have the volume, and here we have rising volume, and the colors are exactly the same as they are on the TradeGuider software. What we were unable to do was, can you just quickly go to the TradeGuider software very quickly?
Sure.
Because we can show the exact same pane. Here, the volume pane, we have the same coloring, but you had that background shading, which sort of shows you high, ultra high, low, ultra low. MetaTrader just didn't have a way for us to paint that, so we weren't able to show that. So that's really the only difference in terms of volume. However, as Gavin was playing around with these texts in the bottom right, we mimic that in the very bottom pane. Can you go to the
sorry, you mean you mean here?
Yeah, where you say spread, narrow, and that kind of thing.
Yep.
So we were able to duplicate some of that in MetaTrader. In the bottom pane, that's your spread. So the colors represent ultra high spread, very high spread, etc. So if you
let me be clear. You're talking about this bottom pane here, Josh.
Yeah.
Here.
Yeah.
So what you've visually done, let me be clear on this, is
right.
where there's a very wide spread. This has got nothing to do with volume at all, has it? It's
No,
only
nothing.
spread that you're looking at.
That's
nothing
right.
to do with volume. This is totally new, totally unique. It's not in any of the software at the moment. This is only in, I believe, in MT4, correct?
That's only in MT4.
Correct. And
Yeah.
what it's looking at, look, you see the wide-ranging bar? This is telling you where the wide-ranging bars are appearing, because they're relevant. Why are they relevant? Think about it. If a wide range happens in a time frame, especially when you see very high volume on it, like here, something's going on. So this is a very visual way of seeing where wide range spreads are happening. For instance, when stopping volume comes in on the market, when professional money decide to stop and reverse the trend, you're going to get widespread down bars on high volume. Now here we can clearly see, and it gives you here a description. It tells you that, and Josh, maybe you can describe that. It says TG VSA relative spread 1.01. What does that mean?
That's just the name of the indicator.
Yep.
And then it tells you the bar information, and then it tells you the value. You can also see, hey Gavin, can you just grab the crosshairs in the top left?
Here.
Yeah. So, and put it over, yeah. So if you look on the right-hand side in the data window, we also display much of the information in the data window. So you can just very quickly see what's going on. You know,
No, that's I can't point at it, but that's to the right-hand side of my
Yeah.
screen, correct? Yeah.
That's correct. So you can see that there's a sign of strength 83. Under sign value, you can see the value of the near stops and vol stops. The relative volume we haven't really talked about. This is a sort of, is there downward pressure volume or upward pressure volume that's building in the system? So there's downward pressure volume building because it's negative. It's a negative number. The average spread is 22.3, and this particular bar had a high spread of value 34. So
Okay, Josh, can I just clarify something?
Sure.
One of the things you're going to notice here is there are green signals in the down move, as you can see here. What we're looking for, and you'll learn this when you become a customer of ours, is that you'll learn that accumulation, I mean buying something, happens as the market falls on high volume. Okay, that's how it works. We don't go long ever on a green indicator in a downtrend unless there is a specific type of indicator, which I found on the Aussie dollar yesterday, funnily enough. There's a reason that the market went up today, and I did forecast this, to be fair, in the webinar with Marcus, because I knew we were going to have an update, I knew we were going to have rising prices today. Now, did anybody see, let me just ask, the signal I showed yesterday, which was the shakeout and bag holding on the Aussie dollar? How many of you saw that? I just want to make sure that you're with me. I'm doing this in advance. I'm not talking about this. I know a lot of you weren't there yesterday, but I just want to see how many of you were. I was with Marcus Heitketer, and I said this is bag holding. This currency pair is going to rally because of that, and in fact it confirmed it. It's right here. Okay, it's right here. This is a very strong signal here, which is why it's gone up. Okay, everyone's confirmed it. I've got a couple of people said you weren't there, but most of you said I heard you say it. Good. So we had over 1,000 people yesterday that signed up for that event, and for those of you that were there, and there was many hundreds, the reason I was very bullish that this market would rebound, and I'm not convinced it's going to go straight up. I think it's going to come back down a bit because of this signal here. But every indicator has a description. Now, Josh, let me ask you, how important is it, in your opinion, that the traders and investors that use this software actually read the dialog boxes, in your opinion?
Well, if they haven't had any exposure to VSA, it's critically important. It's how you learn what the system's really telling you to do. It has great descriptions on what these signals mean, and it's really the synthesis of these descriptions and sort of these trend analyses that make the system so powerful. I mean, I looked at the two double reds in the downtrend, and that could not have been a clearer short signal on the Aussie than if it was flashing. You want to move the window real quick?
Yeah, that was a real good one.
Exactly. Well, you might want to move the window so people can see the trend that I'm talking about.
Yeah.
Right.
Yeah, that's a very good indicator. And maybe, Josh, I'll just describe what's going on there. You're in a downtrend, and
right.
Can everyone read this? Can everyone see this? I just want to check. It says it's based on 2 price bars. Can everyone see this? By the way, guys, for those of you that may have had the older version of MT4, there is a newer version. We can get you upgraded. Don't worry. Some of you said, some of the guys have said, because they bought like 7 months ago, 8 months ago, got a lot of customers here, Josh, that have got this, but they haven't upgraded to the newer version. Yeah, so there's a lot of people here. Now, let me tell you about the laws that drive the market. There are 3 of them. It's very important. It applies to any market. Doesn't matter whether we talk about stocks, futures, or Forex. The laws are supply and demand, cause and effect, effort versus result. Now, the law that applies to this signal, it's one of my favorite, actually. I know you saw it as well, Josh, but it's the law of cause and effect. Here is an up move. Now, the 2 laws, we talk about supply and demand for a minute. There's a lot of supply on this bar. What does supply mean? It means selling. In simple terms, there's more to it, but just for simplicity, sellers are overcoming buyers. Now, when the market goes up, the volume is the highest we've seen. I'll just confirm that, by the way. As you can see, it's massive. Massive volume. So therefore, the market's already in a downtrend. The bars are red. The diamonds are red. You're in a downtrend. And your volatility stop system is telling you, if you're going to take a trade, take a short. You see green indicators in a downtrend. They're not wrong. They're an attempt to hold. The market maker here is holding the market up. In fact, it's not even a market maker in Forex. It's just professional money. They have to support a falling price. Just look at gold right now. Gold has fallen from 1900 to 1550, but they have to hold the price up. They want to lock you in as long as possible before they catch you. That's how the markets work. So here we have an effort. It's seen in the volume. Remember I mentioned right at the beginning, effort is activity in the volume. Activity is high, the price is marked up, but what is the result? There's another universal law right there. Effort versus result. What's the result of the effort to rally the price? A complete collapse. Now I use an analogy. Yeah, you agree with that one, Josh?
Yeah, it's a total, I look at it not as collapse, but as a rejection. Like
Okay.
they tried to get up there, and it was completely rejected.
Here's the analogy I use. Have you ever seen, Josh, the program called Deadliest Catch on Discovery?
Yeah, absolutely.
Okay. This is about crab fishermen. Okay. Now these guys go out in the sea and they get in their boats and they go all the way out into the Bering Sea and they have to catch crab to make money. If they don't catch any crab, they don't make any money. Bit like a trader that never takes a trade. If you don't take the trade, you're probably not going to make any money, but you may not lose any either, so that's good too. But sitting on the sidelines isn't always a good thing. In this instance, we have the crab fishermen. This is their effort. They've gone out for a whole... Imagine this is a 24-hour bar. This is the effort of the crab fishermen to catch crab. So they've put in all their energy to catch the crab. And the result is they've actually cast all their pots. Here it is. All the pots are cast. 500 pots are cast. And they are all empty when they go in. Okay, so there is the effort. There is the effort to push and catch the crab. Now, if we were charting the catch of the crab, the result is a complete rejection, as Josh calls it, i.e., we've pulled up our pots and we've got no crab. Now, if you were charting crab fishing, that's what it looked like. It's exactly the same as I like to analyze the market in housing. Okay, if we were to look at housing, there's many different things that you see in the housing market, but when we see supply coming in to the housing market, it means there's more sellers than buyers. That can only result in one thing, a falling price. And that's why when supply or sellers overcome demand, there will be a fall in price. It's a universal law that you will never change, I can't change, Josh can't change. It's there and it's chartable in the data. And that is why Case-Shiller, which is the index that charts housing, if you'd have looked at that over the last 4 years, as I did, I sold all my properties in England before the crash because I could see supply began to overcome demand. And then what happened? Prices fall. They fall from, everyone blames lots of things, but the truth is supply has come into the market. There is not enough demand. The people that were buying the property can no longer afford it, or the banks aren't lending. So sellers come in. Hey, we got locked in at the top. Hey, we want to get out. Oh my goodness. Hey, we brought 500 grand was our house. We're going to sell it for 450 and hope that we get out. But you won't get out. And I know that because I live in a very wealthy area of Chicago. There's 3 houses here that are in what we call short sale. Do you know what that is, Josh? Because I'm not particularly familiar.
Yeah, it's when the owner can't pay the bank back, and the bank says, you better sell this thing and get whatever you can.
Okay, well, we call that repossession in England, so that's why I don't understand it. But my wife keeps telling me, oh, there's a foreclosure. And it's like a big deal up.
It's before the bank has taken possession. They're forcing the owner to sell. And if they can't get a deal that they like, then they'll take possession and force it on and sell it themselves.
Okay. And in my terms, in my book, I'd call that a gotcha bar. That would be where you put ultimate pressure on the seller to get rid of it at a lower price. No one likes to lose money in a sale. So if you brought higher, you don't want to sell lower. And I'll give you the classic example right now, gold. Gold. No one likes to lose. And a lot of people went long gold and short S&P in August last year. Big mistake. Okay, so Josh, talk us through how these all work together then. So now what I've got here, I've got a series of instruments. I mean, I always liken trading to being like a pilot. I mean, that's just because some of the guys that have been to our seminars are pilots. Do we have any pilots here, by the way? And there's a lot of questions. I'll try and come back to them. I can't. There's too many people here. But any pilots in the room? Anyone? Anyone's an aircraft pilot, an airline pilot? Because it seems to me that this pilot said to me, "Well, Gavin, it seems to me what you're giving us is a series of instruments to guide us to make a better decision." And I couldn't put, and that was a British Airways pilot, and I know you're not here tonight, but you'll be listening to the recording, Robbie. But what a great analogy. The pilot looks at an instrument and says, is everything that I'm seeing on my panel guiding me in the right direction? And I think that Trade Guider as a instrument panel is pretty much what we're looking at, Josh, and see if you agree with my analogy. We're using instruments to guide us to the correct direction of the trade. Would that be a fair comment?
I think that's exactly right. I sort of liken it to all the arrows or dials lining up. And you can go with 3 out of 4 or 2 out of 4 or 4 out of 4, but they're just telling you in different ways where the analysis believes the market may be going.
Yeah, I agree. Honey is asking, is there a live trading room? Yeah, we have 2 of them, Honey, a Forex and a futures one. And for anyone that wants to do that, I'll make sure you can get in there next week. We have live trading rooms with live money. Let me be clear. There's one thing buying a product and a software program and learning it. The best way to learn it is to watch someone trade it. And we do have 2 live trading rooms. Yes, Honey, we do. Absolutely. Right. Okay. Obviously, Josh, a few people here in the room are customers who brought the version prior to this that haven't got a lot of this in. So
right.
Let's deal with that right now. We can upgrade them in the next 24 hours, correct?
Absolutely.
Absolutely. Okay, so there's no problem there at all. So don't go to us. You're a great customer of ours. Please don't worry. You'll get the upgrade. This is new stuff that I'm showing you here right now. So you will get the upgrade. Now, what happens, Josh, in situations where you see a very wide spread on the bar, ultra high volume, and a wide spread? There's a signal up there as well. What does that tell you? Now, you're a trader as well. What is that warning you about when you see those 3 things aligning?
Well, big money or smart money is unloading what they've got, and they're willing to unload it at higher and higher prices and give it to somebody else. And this is sort of why the example bar we're looking at, the price tends not to exceed that bar by much because the smart money has unloaded what they had, and they certainly don't want to buy it again at the same price. They're going to wait until it's lower to buy it again.
Like sort of down here?
Yeah.
Yeah.
I mean,
so that's why it went up the last day.
Yeah, I like, personally, we only have 3 green dots on the diamond. The volatility stops are split, and we're still in a paint bar downtrend. I personally don't have much of a good feeling about this retracement turning into a trend yet.
I agree. I totally agree with you. I think that we've got to be cautious. There is support there. There's no doubt about that.
Yeah.
But until I see, and you're quite right, until we see the diamonds changing and the trend building, we would look for green signals in an uptrend. That's
right.
Not rocket science. I mean, if we look at what's happening live, the last signal we had was an upthrust and the market's come down. So we must always pay attention to the trend. I mean, how much attention do you pay, Josh, to the trend?
A lot. I don't trade against the trend. It's just not smart.
Yeah. LB's asking, why don't you use candles so you can see the bars better? Okay, that's a good one for you, Josh, because I don't use this platform. I'm using the Trade Guider platform, and I don't know if you can do. Can you do candlesticks in there?
Sure. It just paint. You can do the candles is this image in the top bar in the middle. So if you see the plus and minus magnifying glasses, go 2 icons to the left. Go up into the middle. Up into the middle, and there's candles. There's candles. Painting candles is actually a difficult thing to do in this platform. That's sort of what it looks like. we're not candle readers. We let the system sort of dictate trend and direction, and give us an indication of where the strengths are. And we're not looking at this and going, I see a doji here. We just don't. So we don't see a need for candles too much. Also,
but you can have them.
You can have them. Also, we tend to trade on, if we get a signal or get an indication that something's coming, we'll trade on a break of a trend line or a break of a local high or low. So it doesn't really matter if it's a candle or not to do that kind of analysis.
Okay. So let's say I want to place an order now. Okay. So I've got the platform now. You've developed something called Trader Helper. Okay.
Right.
Okay. So let's bring up Trader Helper. So let's say I think it may be here. If it's not here, we can bring it back up. Yeah, just here. Yeah.
It was there. If you click on that, and it pops up on the bottom, you have to drag it up.
Yeah, it's right up here. Now, one of the biggest problems that many traders have, that I've experienced, that I've met, they don't understand how to place an order. Okay, they don't understand it. They're like, okay, I want to get in the market. I want to make some money. How do I place the order? Now, in MT4, and I've tried, it's quite difficult, especially with different platforms. Right. But Josh and Mike developed this product called Trader Helper. Now, I've had probably 60, 70 of our customers using this product, and we've had it out there for a while. I've used it. AJ's got it. I mean, who's that support guy? And one of the things I love about this is you make it simple, Josh. And one of the things you said to me earlier, which was interesting, how can we make VSA simpler? I don't know. But what I do know is you've made the process of placing an order into the market based on VSA fairly simple. Now, let's assume I want to short this market. And please let me be very clear to everyone. This is not a real account. This is not a live trade. I do trade live. I do trade real money. And I am currently at the moment in a position long on the Aussie dollar. But I want to be clear on this situation here. We're playing money. Do not, under any circumstances, follow what we're about to do, because this is not real. Okay, Josh, can you just echo that? Yeah,
this is a demonstration of technology only, not anything related to our opinions about trading.
Correct, and I want to be clear on that. Edward will give you Josh's information at the end, so you can contact Josh. But this is a platform that works. Is it solely with MT4? Is that right, Josh?
Solely with MT4.
So it works. Yeah, it is. So it works with MT4. Now, a couple of things you showed me earlier just blew my mind. So I'm completely new to this, just to be very clear. I've not used because they've only just been developing this. So explain to me what's going on here, Josh.
So we set this up as sort of a big order ticket. You start at the left under symbol, and you just go to the right, and then when everything's okay, you hit send trade, and we make each step or each part of it as easy as we can. So if you wanted to short the market, you just go Aussie US dollar, and if you put your mouse over the order, and there's a drop-down menu there, Gavin. Right? Which one do you want to do? You want to sell the market, right? You want to go short.
That's it. Mm-hmm.
So you select sell market.
Yep.
And then how much do you want to trade? Right now you have 0.1 lot, but you have a $500,000 account here. So how much do you want to trade?
Let's be. So what do I do? Click on this first and then start.
No. Where it says lots, you're now under the amount area, and it says lots.
Okay. So let's trade 5 lots. Let's do that.
You can also select it and fine, go 5 lots.
No, I'm just showing how you can do it. You can do any size here. That's fine.
Right. And now, do you want to take profit and a stop loss?
Yeah, sure.
Okay, so just select your pip distance, which is how far away do you want your take profit? Say 100
Mine
pips?
is generally 100 pips. Yeah, that's mine, so that's fine.
And how far do you want a stop loss?
I usually trade about a 33 stop loss, so let's go.
We don't have 33 in here, so I would go 25.
Okay, 25 is close. That's good.
Right. We also show you what your risk-reward ratio is.
Got it. So now, I'm risking $12.50 for a $5,000 profit.
Right. Now, do you want a trailing stop or a break-even stop put in?
I would want a trailing stop.
Yeah, I'm asking.
Yeah, no, a trading stop, definitely.
Great. So hit the TS button.
Okay.
Right under stop loss, there's a big thing that says T/S. Yep, just select that.
Got it.
Another window pops up. So we have an intelligent trailing stop. So let's say you have 100. So make TS, the trailing stop trigger, say 25 pips. No, the trigger 25 pips.
Oh, sorry. There you go. Yeah.
You can just select that text and type there if you want to.
Okay, so I just type in 25, yeah?
Right? And then let's put the trailing stop 20 pips below that.
Okay, let me just go back to that.
You can get back to it.
Okay.
And then just hit send the trade.
So now I've already set my stop. I've got my parameters set. I know that. So if I'm going to sleep at night and I don't want to worry about the trade, this is going to just manage the trade for me, correct? It's going to put the order in there. Okay. So we're just going to click send trade. Yeah. Now let me be clear, everybody. I just want to reiterate this. This is not a real trade. We're not snake oil salesman. We're not pretending to take a trade here. When I trade my real account, which I will, I'm quite happy to trade real money, I will tell you, this is not. And can I just repeat that to everyone? Can you all type in yes if you understand what I'm telling you? Because I don't want to be some sort of guy that pretends to take a trade that I'm not. This is not a real trade. Do you all understand what I'm telling you? Because I really hate people that pretend to take trades when they're not. This is not a real trade. We're demonstrating something. I do trade live. I trade my real money. But this is not a real trade. Okay, good. All right. So we're going to send the trade. Okay, so we send that. So that's now all. Okay, so the order's gone in here. So Josh, what happens? It sends it. It fills the order. I click OK, yeah?
Yep, click OK. And you can see that under open positions, you have number 1. So you have 1 open position. So if you select that.
Okay, so where is the open positions? There it is. Yep. Okay, there it is.
And then just hit Control and select. Just hit Control and select hold the Control button and select that. And click it.
Control.
There you go.
Yeah.
See, one more time. I want you to. Okay, sure. So you can modify anything. Reverse it.
Reverse it. Close it. Okay. Exactly. Yeah, I got you. Okay. So let's assume that we're right about the trade. You can see that if I traded that amount, if this was real money, you'd already down because of your slippage. Now, can you explain, Josh, the difference between spot Forex and currency futures? When you go into a spot Forex chart, people say, I clicked the button to order, I was immediately $100 down. What happened? Can you explain that?
Absolutely. On exchange-traded things like an Aussie future or Euro future, there is a bid and ask difference of 1 to 2 pips. Usually it's 1 pip. So when you enter the trade, you'll sell it 1 pip below where you can buy it back from. And the broker tends to charge you $2, $3, $4, $5, depending on your broker and the services that they provide, for each side of the trade. So when you buy it, you're immediately 1 pip down, but you spend, say, $4 to trade it. And then when you buy it back, you spend another $4. So the broker makes their money on commission. In Forex, in general, there's no commission. And because various banks are providing liquidity and every broker has a different set of buyers and sellers, the spread can vary pretty widely. It can vary. So on the Aussie dollar, the spread could be 1 to 1.5 pips on the low end to 3 pips because the spread is constantly changing as people change their bids and their asks and their orders. And
Josh, can you, for those that are new, define what a spread is, can you?
Sure. If you can minimize this window, you can actually show it real quick. Just hit the minimize button right
Close
there.
this down. Yeah.
Just hit minimize. No. Minimize the Trader Helper window, please.
Okay, minimize.
Hit minimize.
Hold on. There it is. Got it. Okay.
Okay. And now, if you go over to the symbol area, select tick chart on the bottom where it says symbols tab and then tick chart tab.
Okay.
Right. So right now we're looking at the pound dollar. The red line is the current bid. The blue line is the current ask. So it looks like the spread is about 2.5 pips.
Mm-hmm.
And you can see them moving around, right? The blue can move independently of the red, and they can narrow and they can widen.
Can you just explain what bid and ask means to those of you? There's a lot of new people here. So
Sure.
What is the bid and what is an ask? Because to some people they see this price movement. If they're going long or short? What does this mean to them?
The bid is what people are willing. Ask is what people want, and bid is what people are willing to transact at. So you sell at the bid because that's what the buyers are willing to buy from you at, and you buy at the ask because that's what sellers are willing to sell to you at.
Okay, just repeat that. That's very important for traders that are new.
Sure. You sell at the bid because
The bid is the sell. Mm-hmm.
the bid is the bottom. The red is the bid.
Sorry, yeah, the bid. Sorry, yeah.
Because that's what people are willing to sell it to you at.
Yep.
You buy at the ask because that's what people are willing. I'm sorry, I inverted that. You sell at the bid because that's what people are willing to buy from you at, and you buy at the ask because that's what people are willing to sell it to you at.
Yep. Okay. Does everyone understand that? You want to repeat that again because I can see there's a few people here that are confused by that.
No problem. If you
Right, let's do it simply. Let me ask you a question. So the blue line here, right, which is blue with something. What is this the bid or the ask?
That's the ask, and that's
The
what people
ask.
are. That's what people are asking for if they want to sell.
So basically, they may have bought down here, and they're asking you to buy at this price.
Right. So
Okay.
exactly.
Quick analogy. I just bought a calculator for $1 here, okay, and I think it's worth $1.20 up here. So
That's
I'm
correct.
asking you to pay me 20 cents more than I bought it for because I think it's got value and it's going to keep going. Correct?
Correct.
Okay.
And the bid is what people are willing to buy it at. So what
Okay.
you would sell it to them at.
Okay. So here, the bid is we've come down to this price, and they're saying, well, we think it's going to go lower. So you can get it from us here at this price, but you don't know which way it's going to go. But this is our lower price level. So you can get it up here, or you can get it down here. It could go lower, it could go higher. Which one do you want?
Exactly.
And then you use VSA and volume to look at white. Now, Mark made a good comment. You said you're not sure about FXCM because of a spread. Okay, that's a good comment. We'll look at why you can use in conjunction. There's no right or wrong. I mean, we've been asked about which brokers we recommend, what we recommend, I don't recommend anyone. The one most important thing you must do is work out what's right for you as a trader. What suits your trading style. You've got to do your background, you've got to do your checks, and you've got to make sure you're happy with the broker you're dealing with. But look, there's many thousands of brokers out there. I work with Josh and Mike. Josh, what's your comment on that? I mean, the comment from Mark was, I don't like the spreads from FXCM. What's your comment on that?
Well, there's lots of comments. It depends on the instruments you're trading, when you trade them, what kind of trading you do. There are brokers that don't like short-term traders and they try to exclude them. Brokers that deal with large traders versus differently than small traders. I mean, we work with a variety of brokers. And
Josh, sorry to interrupt you, mate. I've got several people coming in saying they're going to have to leave soon, but they want your information. So it's
Sure.
Josh at fxinternals.com, yeah?
That is correct.
Okay, you got questions for Josh? Don't email me because he's the expert on this. If you've got FX questions, email Josh directly. He's part of the team. We trust him greatly. Just if you've got questions about Forex versus futures and stuff like that, email Josh because, quite frankly, I mean, I don't get into the ins and outs of brokerage. That's not my what I do. I'm an educator, but Josh has got great experience, as has Mike, in that industry. So just email him, and I'm sure Josh, you'll be happy to help people with their questions. Yeah.
Yeah, absolutely. But let me just answer Mark's question, which is FXCM has good spreads on some instruments, bad spreads on other instruments. It depends what you trade. They are very, very big, so liquidity and funding is not usually a problem. There's, there are advantages and disadvantages to every brokerage, and there's no perfect brokerage. Much like in the futures world, there's brokers that have good service and bad service, and high commissions and low commissions, and it's all different. So I'm happy to talk to anybody about finding them the best broker. We work with a number of brokers. We use FXCM because they're one of the largest, and it helps on the volume analysis to have a very large brokerage as well behind you, that you're doing the analysis with.
Yeah. So let me just go back to the charting here. So let me be clear, because someone just asked a question. It's a good question. Are you saying, is the question, that this charting package and data is completely free? Now, the answer is it is completely free, but the VSA add-in study and the training that goes with it is a cost involved. I won't, let's be straight up front about that. But the actual platform, Josh, from you guys, you can have it for as long as you want, correct?
Well, you can have the MT4 platform for free, and for owners of the MetaTrader VSA plugin, we'll let them use the Trader Helper platform for 90 days for free to get used to it and to play with it. And if they open an account through us, they can get all of our software, not the VSA software, but the Trader Helper software for free on the accounts that they open.
Okay, so let me ask you a question. I want to place an order here on the British pound. Let's say I want to go short. Now, you showed me something earlier, which was this, which is some scripting, which is all to do with Trader Helper. Now, one of the biggest problems people have is knowing how to place a correct order in the market. Now, does this work with any brokerage firm, or is it just with FXCM?
Any MT4 broker this will work with.
Anyone? Okay.
Yes.
So, because I've got a lot of questions coming in on it. Okay, so let's say I want to do a sell order. What do I do?
So let's bring up Trader Helper real quick.
Okay.
Just so you can see it.
There it is, up at the top. In fact, we're on our way to a good trade there.
Exactly.
This isn't a real trade. Okay, so we've got an AUD, so we can see clearly from Trader Helper immediately we've got an active order. If that was real, we're in it, correct?
Right. So let's say you wanted to short it below that swing low.
Just hit. Let's say well, actually, in this instance, let's say I'm going to go long, okay, because I think it's going to spike up.
Great.
Okay, so I want to buy the market just above this breakout.
Great. So select single order tab on the Trader Helper window, please.
Okay, so we're going to select single order
Top left.
tab.
Top left. Top left.
There it is.
There you go.
Got it. Okay.
Now just drag the buy script and let it go at the point that you want to trade.
So basically, left click this and drag it up to here, yeah?
Yep.
That's pretty easy. Okay. We're going to just put it just above.
And a little green line shows you that's, and you'll notice the order got changed to a pound dollar. A buy stop is the proper kind of buy, and it put the entry price at that point. And
okay, so it doesn't leave it on the chart then. It's in the screen. Now, is that order placed, or do I have to send it?
No, it is not placed yet. It is just preparing the order ticket for you to send.
Gotcha. Okay, that's clever. Okay, I want a stop loss in place. So how do I do that?
Drag the stop loss script to the point around the purple volatility stops.
Yeah, so I'm going to put it just below. I'm going to put it on the green one because I'm a bit conservative there.
So put a stop loss in, and now put the take profit, wherever you want.
Okay, so we're going to take a profit, and we want to do that right up here.
Perfect.
Okay, there's no logic for this, but I'm just showing. So what it's done is now set the whole parameter, yeah?
Yeah, exactly. It's set up the order, a pound dollar. You're going to move that window. A pound dollar.
Yeah, I've got it.
Stop at the entry price with a take profit and stop loss.
Okay, so let's say I want to send that trade now and get it out into the market. Let's assume this is a real account. It's not, but what do I do?
You just hit send trade.
Just that.
Yep. And then this is a pending order. So you see your pending order tab now has one order. You can just click on it.
Yeah, so that's down here, is it? Or
no, up on the top, on Trader Helper, on the Trader Helper window.
There it is. Yeah, I got it. There it is. Yep, you got it.
And there's your order.
Potential profit, so I've put a really silly trade in there I'd never use, but anyway, you can see it. So it tells you where you're going. If you're a swing trader, very, very useful, because then you can leave this and you can see it. The biggest reason that traders make silly mistakes is they don't see what their potential profit and loss is.
Right.
And can I ask you, why did you invent this?
Because there are pretty good trading platforms for futures, but MetaTrader is such a popular platform, but it's a terrible interface for traders. Like,
let me ask the question quickly. Sorry to interrupt you. How many of you here use MT4 and find the order execution cumbersome? Yes or no? Just ask the question. I just like to see the. I mean, with no disrespect, Josh, I just want to see what people say.
No problem.
You would not believe what I'm seeing.
Gavin,
it's horrible. Horrible.
Yeah. It's horrible.
Horrible is the word. A cumbersome, horrible. Well, I won't say crap because no, okay, I will. I wasn't going to say that. I never use unbelievable. Okay.
Right.
The response to what I've just seen is incredible. It's apparently really bad, and I've never used it, so I can't comment. But I'm just.
It's really bad. You can't have parked orders. So if you enter the market the same way, you can't store that order and send it. We do that. You can't have one cancels the other orders, where if it goes up, I want to get in, and if it goes down, I want to get in, but I only want to do one of those trades. Cancel it when the other one's hit. We do that.
Gotcha.
You can't close multiple positions. You have to manually select a position, close it, select a position, close it, select a position, close it. We take care of that. You can't reverse a position like, oh, I've made my money, now I want to close this position and short it. We do that. Like, we've touched on 10 or 15% of the features of what we have in Trader Helper. You know, for those people who don't have a good trading experience with MetaTrader 4, I encourage you to try our product. It's a 30-day demo for anybody, whether you're a customer of TradeGuider or not. We think it's just a much, much, much better way to trade.
Okay, so a couple of questions came in. A few people here have got the MT4 plugin. They've already got the platform. They said, can we get the can we get Trader Helper free for a few months? What's your answer?
Absolutely. We'll give them free. Just email me, and I'll email them some information about that.
Okay, so if you're a TradeGuider user, you've got MT4 already, or you've got any of our products, like software products, you can get that for free for 3 months, no charge. Okay, just email Josh. I see several customers emailing me right now. Yeah, it's no charge. For 3 months, you can try it, see if it helps you, and you can get the platform. Absolutely. Yeah, I mean, a couple of you said you've got TradeGuider. I mean, as I said, you try it for yourself. I mean, that's the best way to learn. But just finally, just before we finish off here, Josh, because I've got a load of questions coming in. I'm not going to be able to answer all of them. The question came in about, could you explain the volume thermometer? Now, the volume thermometer, I'll try and help with this.
Yeah.
To the right here, you see this? Yeah, this is what you've replicated in MT4, correct? So you've replicated the bullish versus bearish volume thermometer at the bottom of the screen there, so that people can measure where there's bullish volume versus bearish volume, and then take the trade accordingly.
Correct.
Yeah, so that's exactly what it is.
We just did it on a bar-by-bar basis as opposed to the last bar basis.
Okay, Lance asked a question, and maybe you can answer this. He said he thinks he's read somewhere that MT4 doesn't allow for a trailing stop unless the app is open. Will this allow for trailing stop even if you shut down the app?
He is absolutely correct. The MT4 servers do not have a capacity for trailing stops. We hold the stops on our application, so it needs to be running.
So you have to keep the application running?
Yes.
Lance, great question, my friend. That was one of the best ones.
Also, we have the ability to hold all take profit and stops on our system, so that you don't have to put the take profit and stops into the broker's server if you want to keep that information from the broker, and
Gotcha.
we'll manage that as well.
Okay. So there's lots of questions coming in for you, Josh. The easy answer, because we're running out of time here, because I want to keep this below. Well, we're overrunning already. It's Josh at FX Internals I've put that into the entire audience. Josh will be happy to help you. Someone said, can we get the MT off? Yeah, absolutely. Yeah, here, I'll just put this in quickly because we've got to run here. We haven't got a lot of time. But there it is. Yeah, you can get the everything we've just shown you, including the software for MT4, the VSA plugin, and you can get it for life. Okay, this is not a yearly price. This is forever. $699.95. You get a membership to the club, the trading course, and the trading course is done by Tom Williams and myself, and we're doing that. And if you're an existing owner, you get it for free. If you're an existing Trade Guider customer, you get the course for free, so you don't have to order this, okay? This is for anyone that's new. You get all of these features. I'll put the link in here now if you want to find out more about it. You can be set up within a few hours. It's MetaTrader 4. It's the VSA software add-in. Okay, and again, if you're not still, you've got questions, you could always order a demo of this. The offer's open until Sunday, so you don't have to rush. But if you want to get it, we will be doing a course, and you do get access to the Trader Helper platform and the charting platform we just showed you. Because there's a lot of you that are new here, been asking questions, how do you get it? That's the way to get it. Just go to that website. Okay, I'm going to try and answer some of the questions. I believe I know why technical analysis does not follow volume, says Jerry. I think I know too. But we can have a chat about that. Now, if anyone orders this, okay, and you order the MetaTrader floor, I'm going to give you 1 month's access to our futures trading room, okay, or our Forex trading room, and there'll be no charge. So either of the trading rooms will show you, depending on what you trade, because some people trade currency futures like I do. Okay, okay, there's loads of questions. Okay. Christopher, that's an add-on, and you can contact the office about that. You're talking about these indicators here. Just contact the office. They're the work of a guy called Robert Hoffman. We don't sell them publicly. I don't think we've sold any for a long time. But if you are interested, we'd be very happy to help you. And then I'd connect you with Rob. They're his work. They're not my work, and they're not the work of Trade Guider. The guy who invented that is a guy called Robert Hoffman. How do we upgrade to MT4? Jack, upgrade it. Contact me, Jack. Just email me with your question. That's the easy answer, and I'll contact you directly. If you've got questions about something like that, I can filter it in the right direction. I'll probably call you myself. If not, I can get Darren, my brother, who also works for the company, and Brittany and Lauren. We've got a team here. There it is. Okay, lots of questions coming in. Is Josh and the team developing the scan feature? Yes, GoTo, they are. That's exactly what they're doing. And they're actually, Josh, we might as well tell everyone, you're coming over to England to see Tom Williams and Philip Friston on the 23rd of April.
Yeah.
Yeah. So lots of things go. There's a lot of secret squirrel things going on that we can't discuss. Not publicly, otherwise we'd be inundated. Okay, I'm just seeing. Yeah, it's Josh. Josh has actually typed it in. Josh at fxinternals.com. I'll put it in again. Josh at fxinternals.com. There you go. I've just typed that in again for those of you who've got questions. Raj is saying, I've got no experience whatsoever. Raj, the best thing you can do is email me with your details. Give me a phone number and I'll call you, or my brother will, and we'll help you. The best thing you can do if you no experience, ask questions. We're here for you. You know, we'll spend an hour with you. There's no obligation. Call us.
And practice. Right?
And practice, yeah, I agree. And if you've got questions for Josh, I mean, Josh he's a busy man, but I know that he'll spend time and help you and assist you. And it's a good question. If you're brand new to this, I totally understand. I was once, 10 years ago. I didn't understand any of it. And now I've written 2 books on the subject. So, you know, you can be an expert in anything, really, if you study it. And if you want to make money in the markets, you better become an expert. What do you think about that comment, Josh?
Well, you certainly won't make money staying a novice. I'll say that. There are plenty of experts who lose money, too, is my problem.
That is true. That is absolutely true. Alrighty, okay, so we're at 7:20. Is there any more questions? If not, if you have got questions, I've missed them. Kev says, I've got the MT4 plugin, but wonder why whenever we mouse over the diamond indicator, it doesn't refresh. Kev, just email AJ on that one. If you may have an older version. There's things that have improved. Alan, you can get my books. Just email me, and I'll send you my second book for free. Again, I'll put my email address up, gavinh@tradeguider.com, and you'd be very welcome to that. I have a book on the subject. It's completely no charge. Just send me the email. AJ is our support guy, and I'll just email. I'll put it in the window here. So you should see this any second. It's just AJ@tradeguider.com. There you go, and he's the guy that will help you. Great. Well, Josh, thank you very much for your time, my friend. Appreciate it, and giving up your evening, your Thursday evening. It was very good. I think we've all enjoyed it. I hope you've all enjoyed it, everyone. We will put this on the website, the Trade Guider website. Harney, yes, you can pay in 2 installments. You need to contact Brittany in the office. She will be able to help you. We'll always help anyone. We're not here to be obstructive. We're here to help you. And from everyone at Trade Guider, God bless all of you. I wish you well. Wish you good trading, constant profits, and remember, be positive, and you'll make money. Thanks, Josh. Take care, everyone.
Thanks, guys. Bye-bye.
Goodbye.